Hello traders, Gary Wagner here. It is 11:31 in Honolulu, 5:31 in New York on Wednesday, July the 6th, 2022, and this is the Daily Report for gold and silver. Today's release of last month's FOMC meeting confirmed market sentiment for both gold and the dollar, taking gold dramatically lower and the dollar substantially higher. Gold lost $26.70 today. That's a drop of 1.5%, with the August futures contract currently fixed at $1,737.20. The dollar also had a significant gain, although it was about 1/3 of the decline in gold pricing, gaining 56 points or 0.53%, and the dollar index is currently fixed at 106.885. We're looking at a daily candlestick chart of gold futures, and we can see that technical chart damage really began last week when on Friday, gold closed slightly lower on the day, but that close effectively came in below this support trend line. To create this trend line, we simply used a series of higher lows, the first one being the low of the flash crash that occurred in August of last year, and then the low that occurred mid-May when gold traded just below $1,800 per ounce. What is evident is that we got definitive confirmation that there was major chart damage yesterday when we had gold decline in double digits, opening above but closing well below the trend line and slightly below the 78% Fibonacci retracement level at 1766. On yesterday's video report, we spoke about the fact that because gold closed just below the 78% Fib retracement at 1766, we would have to let the dust settle before we could determine if there was potential for this to be a price point where gold found price support or a continuation of bearish market sentiment taking gold prices once again lower. Bearish market sentiment continued through today when this morning the Federal Reserve released the minutes from last month's FOMC meeting. This is a meeting where they raised interest rates by 0.75%. The minutes resulted in strong bearish market sentiment for gold, opening just below the 78% Fib retracement and trading substantially below that, with August gold currently fixed at $1,737.90. Our current target for potential support is now at $1,720. This is based roughly on the closing price of the flash crash that occurred in August, as well as lows that we saw at the end of September, which takes us to our current take on recent dollar strength. We believe that the dollar is within striking distance of finding resistance at 107.46. The dollar is currently at 106.88, just as we believe that gold is within striking distance of potential support at $1,720. We used a Fibonacci extension to come to our conclusion or forecast for dollar strength because the dollar is currently trading at a 20-year high. To do that, we looked at the rally that began in 2014 when the dollar was at 79, up to these highs at 103.95. We begin the extension after the correction from 103.95 to 88 that occurred at the beginning of 2018. This double top that we identified prior to the breaking well above that is actually the 61.8% Fibonacci extension of this rally. So the next target that would come in would be the 78% Fib extension level. That comes in at 107.46. And we believe that the dollar is within striking distance of reaching that price point in the same way that gold is within striking distance of $1,720. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.